Imagine this for a second. It's a scenario that feels almost like a fever dream. You wake up one morning, you roll over, grab your phone, and you open your banking app. And you see a number that just makes your heart stop.
Hmm.
It says you have 1 million pesos. And, you rub your eyes, you close the app, you open it again. It's real.
Right. The "is this a glitch" moment.
Exactly. And for a second, you feel invincible. You start mentally spending it, right? A
Mhm.
down payment on a house, maybe that trip to Japan you've always put off, a new car. You feel secure.
Yeah, that's life-changing money for most people.
Totally. So you tell your friends, hey, I'm doing really well. But then a few months later, this very serious looking person in a suit, let's just call him the auditor, he knocks on your door.
Oh no, I see where this is going.
He sits you down, opens a laptop, and says, actually, hold on. We checked the math. We checked the assumptions. And you don't have 1 million pesos. You have 35,000 pesos.
Wow, that is a stomach-dropping moment. That's the moment the floor just falls out from under you.
It's not just dropping. It's a 96% drop. It's not a rounding error where you forgot to carry the one. It isn't a fluctuation in the currency exchange rate. It is a complete and total collapse of reality.
Right.
Now, for you or me, that's a tragedy, a personal tragedy. But what we're looking at today is that exact same scenario, but played out on a scale that is almost impossible to comprehend. We are not talking about personal savings.
No. We are talking about one of the largest, most politically connected conglomerates in the Philippines.
And that scale, that's what makes the story so terrifying and, frankly, so fascinating.
It is. We're talking about the difference between a local bankruptcy and a global headline. We're talking about the credibility of an entire nation's capital market being put on the line.
To put a really fine point on it, we are talking about a difference not of thousands, but of trillions. Specifically, a reported net income of nearing 1 trillion pesos and assets of 1.33 trillion, which, upon closer inspection by the regulators, just evaporated. It vanished into an audited asset base of just 35.7 billion.
It's the financial equivalent of a magic trick. Except, the audience isn't clapping, the theater's on fire, and the magicians, who in this case are some of the most powerful people in the country, are facing serious criminal charges.
And this is a massive story. It's breaking news. This just happened yesterday, January 30th, 2026. The Philippine Securities and Exchange Commission, the SEC, has officially filed criminal complaints against Villar Land Holdings Corp.
Which, for people who've been watching the market for a while, they'll remember it as Golden MV Holdings.
Right. But they didn't just stop at the company itself. They went after the officers, the directors, and a whole network of related companies.
And that's the key here. When you look at the list of people named in this complaint, you realize immediately why this is such a seismic event. This isn't just, some rogue accountant in a back office cooking the books to hide a loss.
No.
This goes right to the top. This involves the Villar family.
I think we need to pause here and really contextualize who we are talking about. Because for some of our listeners, maybe those who aren't glued to Philippine business news or our international audience, just saying the Villar family might not land with the same weight. Who are they?
That's a really good question, because the context is absolutely everything here. If you're listening from the U.S., imagine a family that combines the real estate ubiquity of, say, the Trumps with the entrenched political machinery of, like, the Kennedys or the Rockefellers. That's the level of influence we're discussing.
That's a heavy comparison.
But it's accurate, I think. You have Manny Villar Jr., the patriarch. He's a former Senate president, a former Speaker of the House, and has frequently been named the richest person in the Philippines. He built an entire empire on mass housing.
And his wife, Cynthia Villar.
A powerhouse in her own right. A former senator, known for being a fierce defender of their business interests, especially in areas like agriculture and land use.
And it doesn't stop there. The next generation is deeply involved, too.
Oh, absolutely. Deeply. You have their son, Mark Villar, who is a current senator and was the former Secretary of Public Works and Highways.
Which is a very powerful position when your family is in real estate and construction.
You could say that.
Yeah.
Then there's their daughter, Camille Villar, also a sitting senator and a high-ranking corporate officer in their businesses. And Manuel Paulo Villar, who runs the day-to-day business operations. So this is a family that sits at the very, very intersection of immense political power and massive business influence.
So don't just play the game.
In many ways, they built the board the game is played on.
Which is why the stakes for this deep dive are so incredibly high. We aren't just looking at a balance sheet discrepancy here. We're witnessing a stress test for the entire Philippine legal and financial system. Can the regulator actually regulate the rulers?
Exactly.
So the mission for us today is to cut through the legal jargon, and believe me, there's a mountain of it, to really understand how a valuation of this magnitude just unravels.
We need to get into the mechanics. How does 1 trillion pesos appear on a balance sheet? And then how does it just disappear? We need to understand what market manipulation actually looks like in practice, not just as a term in a textbook.
And we have to ask the bigger question. Is this a one-off, a unique case, or is it a symptom of a much deeper rot in how we value assets, especially in emerging markets?
And ultimately, can the Philippine capital markets maintain any credibility when 1 trillion pesos can turn out to be a mirage?
We're pulling all of this from the latest reports, specifically looking at the SEC filing documents, which were covered extensively by Rappler just yesterday. So grab a coffee, maybe double-check your own bank balance just to be safe, and let's unpack this.
Let's get into it.
Okay, so let's start with the bombshell filing itself. This happened yesterday, Friday, January 30th, 2026. The SEC walks into the Department of Justice. What exactly did they drop on the desk?
They dropped a comprehensive criminal complaint, that is. It's essentially a declaration of war against accounting fraud at the highest levels. The central company here is Villar Land Holdings Corp., or VLC, and the SEC is alleging that this company, and more importantly the people running it, violated multiple sections of the Securities Regulation Code, or the SRC.
So we mentioned the family members, Manny, Cynthia, Mark, Camille, and Paolo. They're all named. But the complaint also names independent directors. Now, I always see this term in corporate resorts, independent director. It sounds so responsible, so proper? Why are they being charged?
This is such a crucial point, and it often gets missed in these stories. In corporate governance theory, an independent director is supposed to be the adult in the room who isn't part of the family or the management team.
Right. They're supposed to be objective.
They're there to represent you, the minority shareholder, the public investor. They're supposed to look at a proposal from the CEO and have the courage to say, wait a minute, does this actually make sense? Is this legal? Have we checked this?
So they're the brakes on the car.
Yeah.
The safety mechanism.
Exactly. They're the check and balance. And in this complaint, the independent directors, Anna Marie Pegsibigan and Garth Castañeda, are named as respondents. By charging them, the SEC is sending a terrifying message to every single boardroom in the country.
And what's that message?
The message is, if you are an independent director and you just act as a rubber stamp for the majority owners, you are liable. You can't just sit there, eat the biscuits at the meeting, collect your director's fee, and then say, oh, I didn't know, when the fraud comes to light. Ignorance is not a defense.
That is a massive shift. I mean, usually the independent directors get a slap on the wrist, maybe a fine, while the CEO takes the fall.
Not this time.
Yeah.
And it gets even wider. There's another group of people named the related parties, and this is where we see the names of other companies, like Infra Holdings Corp. And MGS Construction.
Ah, so the network.
The network. The officers of these companies, Josephine Bartolome, Jerry Nivared, Joy Fernandez, are also implicated. And very significantly, a man named Virgilio B. Villar.
Who is Manny Villar's brother.
Right. So you have the patriarch, the matriarch, the children, the brother, the corporate officers, and the independent directors. It's a full-on sweep. The SEC is alleging this was a conspiracy.
Okay, so we have the cast of characters. It's extensive. Now, I want to get into the specific charges. The SEC cites the Securities Regulation Code. Let's break that down. What specifically did they allegedly do wrong?
So you can think of it as three main pillars to the charges, and they kind of escalate in severity. First, you have Section 24.1D. This deals with misleading statements or disclosures.
Okay, so this is the trillion versus billion issue.
Exactly. The law basically says you cannot tell the public, the investors, something that is factually untrue. And, just as importantly, you cannot omit facts that would change how a reasonable person interprets the statement you're making.
So it's lying by commission or lying by omission. Both are illegal.
Precisely. The second pillar is Section 24.1B, which covers price manipulation. This is much more nefarious. This isn't just about saying something wrong. This is about doing something wrong. This is the allegation that they didn't just let the market determine the price of their stock. They actively interfered. They put their thumb on the scale to make the stock price look different than it should have been. In essence, they rigged the game.
And the third pillar?
Section 26.3, which is a broad provision covering fraudulent securities transactions. It's a bit of a catch-all for deceptive practices. And then, as a sort of standalone bombshell, there is a specific charge leveled directly against Camille Villar for insider trading, which is its own special kind of corporate crime.
Wow, okay. I want to dive deep into that first pillar because it's the headline grabber. Let's get into section 2, the trillion peso discrepancy. This is the thing that makes you stop scrolling and say, what? Walk us through exactly what happened with their 2024 financial statements.
Okay, let's set the scene. It's early 2025, and companies are preparing their annual reports for the previous year, 2024. Villar Land releases a preliminary report. The market looks at it, and analysts, investors, they collectively gasp.
Why? What were the numbers?
They reported total assets of 1.33 trillion pesos.
Trillion. With a T.
With a T. And even more shockingly, they reported a net income that's profit of nearly 1 trillion pesos.
Okay, wait. I need some context for that. What was their profit the year before?
To give you that context, in 2023, their profit was 1.6 billion pesos.
Hold on. From 1.6 billion to nearly 1 trillion. I'm even doing the math in my head and my brain is breaking. That's, what is that, a 60,000% increase?
The percentage is almost meaningless because the jump is so absurd. It's not growth. It's like a glitch in the simulation.
It's science fiction growth. How do they even try to justify that?
Right, you can't just write that number down. So the company had an explanation. They didn't claim they suddenly sold 1 trillion pesos worth of houses. They didn't claim they discovered a mountain of gold under one of their subdivisions.
No.
They attributed this massive, massive jump to something called fair value gains.
Okay, fair value. I've heard this term thrown around in finance a lot. It sounds nice. It sounds fair. But how do you get from 1.6 billion to 1 trillion using that? You can't just write a number on a napkin and call it fair value.
You can't. But you can get surprisingly close if you're willing to abuse the accounting rules. So here's the deep dive into how this works. In accounting, there are broadly 2 ways you can value a piece of land on your books.
Okay.
One is the cost model. This is simple. It's what you paid for it. If I'm Villar Land and I bought a rice field in Cavite for 100 pesos back in 1990, it stays on my books at 100 pesos, effectively forever until I sell it.
That sounds safe, conservative, a little boring maybe.
Extremely boring. And it doesn't do much for your stock price because your assets look small and undervalued. The other method is the fair value model. This allows you to say, okay, I bought this field for 100 pesos, but look around, it's 2024, there's a new highway nearby, we have all these grand plans for it. This land isn't just a field anymore, it's the future Villar City, a planned metropolis.
So you get to reevaluate it.
Exactly. You get to say, I'm going to value it based on what it is worth in the market today, or what it could be worth.
In principle, that sounds reasonable. If the land is genuinely worth more, then the company that owns it is worth more.
In principle, yes. But here is the trap. Here is where it gets dangerous. How do you determine the fair value of 400 hectares of mostly raw land that you plan to turn into a city? Do you value it as 400 hectares of raw land? Or do you value it based on the assumption that the city is already built and thriving?
I see where this is going. One of those numbers is a lot bigger than the other.
A lot bigger. It's a technique sometimes called mark-to-model valuation. You build a very complex spreadsheet model that says, okay, if we build a shopping mall in this corner and a high-rise condo here and a tech park over there, then this dirt, this raw land, is actually worth gold.
And then, and this must be the key, this must be the magic trick, you book that increase in land value as net income for the current year.
That's the billion, or in this case, the trillion peso trick. It flows right through the income statement to the bottom line. It gets reported as net income.
Wait. I need to be clear on this. So they're booking profit on the land based on an assumption that buildings will be built and sold at premium prices in the future, and they get to call that profit today.
Yes. That's exactly what the SEC is alleging happened. It's non-cash income. You can't use it to pay your employees' salaries. You can't use it to pay dividends to shareholders. But to a computer algorithm or a casual investor just reading the headline, net income, 1 trillion, it looks like you're running the most profitable company on earth.
That feels like cheating. It feels like you're spending money you haven't earned yet. It's imaginary money.
It's the definition of paper wealth. But here is the catch, and this is where the SEC really stepped in. These incredible numbers weren't exactly verified. This is what we can call the audit problem. The SEC alleges that Villar Land disclosed these eye-popping figures to the public before their external audit was actually complete.
So they put the headline out there before the fact-checkers had even finished their job.
That's the allegation. They dropped the bomb on the market first and worried about the details later. And that seems incredibly reckless, like fire the CFO immediately. Reckless.
So what happened when the auditors did
Well,
finish?
this is where it gets even messier. Later, the independent auditor had to come out and issue a clarification. I basically had to say, hey, everyone, you know those financial statements that shocked the world? Uh, they're not fully audited. Specifically, the auditor flagged the property valuations, the exact engine driving that trillion peso profit, as not being fairly verified by them.
And then came the crash, the reality check.
Then the other shoe dropped. Hard. When the audited financial statements were finally submitted, the ones that actually followed the rules and passed the smell test, the picture was completely, wildly different. Total assets were not 1.33 trillion pesos.
What were they?
They were 35.7 billion.
I cannot get over that gap. From 1.33 trillion to 35.7 billion. That's about 97% of the company's claim value just gone. It vanished into thin air. It's like finding out the gold bars in the vault are actually chocolate coins wrapped in gold foil.
It vanished because, in a tangible, verifiable sense, it never really existed. It was a valuation assumption. It was a dream on a spreadsheet. And when you strip away those fair value gains, the operational reality of the business was actually quite grim.
So what did the real business look like?
Without the magical land revaluation, their operating profit, the money they made from, actually building and selling things, it fell. It fell by roughly 29% to 1.22 billion pesos.
So the core business of building and selling homes, the thing the company actually does, was doing worse than the year before.
Exactly. The reports mentioned that sales of residential properties were low. So the whole narrative of we are a trillion peso juggernaut was essentially a smokescreen to hide the much less exciting reality of we are a struggling developer with declining sales.
And this is what the SEC calls materially misleading.
Materially misleading is the polite legal term for you trick the market. The SEC argues that this disclosure stunned investors and triggers sharp volatile movements in the share price. People saw 1 trillion profit and they reacted. They bought stock. By the time the truth came out months later, the damage to the integrity of the market was already done.
But this story gets deeper. It wasn't just about, let's say, bad accounting or over-optimistic spreadsheets, was it? The SEC alleges there was an actual machinery in place to manipulate the stock price itself. This takes us to Section 3, the mechanics of manipulation.
This is where we move from the gray area of creative accounting into what the regulators are calling, effectively, market rigging. The SEC alleges there was a concerted, deliberate effort to create artificial support for the stock price. Some of the analysis of the filings even use the term hocus pocus.
Hocus pocus, okay. How does this work? How do you artificially support a stock price? And who was doing the rigging?
The complaint targets those related companies we mentioned earlier, Infra Holdings Corp. And MGS Construction. And remember, the filing points out that Infra Holdings is owned by Virgilio B. Villar, Manny's brother.
Right.
The allegation is that these companies were actively trading Villar Land shares in a way that was designed to prop up the price, to make it look stronger than it really was.
Okay, hold on. I want to challenge this for a second, just to be clear. Big companies buy back their own stock all the time. Apple does it. Microsoft does it. It's a normal thing. Why is it a crime when Manny Villar's brother's company does it? Isn't that just supporting the family business?
That is a crucial distinction, and it's a great question. When Apple conducts a stock buyback, they announce it to the world. They file paperwork with the SEC. They say, we have authorized a $50 billion program to buy back our shares. It's a transparent corporate strategy to return value to shareholders. The market knows who is buying and why.
Okay, so a big part of it is the secrecy.
It's the secrecy. And, more importantly, it's the intent. The SEC is alleging this wasn't a transparent buyback program. This was a practice known as painting the tape.
Painting the tape? That sounds like something out of an old gangster movie.
It's an old trader term for the days when stock prices were literally printed on a physical ticker tape. If you wanted a stock to look active and popular, you and your friends would just trade it back and forth between yourselves. You buy from me at $10, I buy it back from you at 10.10, you buy it back from me at 10.20.
So you're not really changing ownership in a meaningful way, you're just creating volume.
Exactly. You're creating the illusion of activity. You're tricking the other people who are watching the tape into thinking, wow, everyone wants this stock, the price is going up, I should buy some too.
And in a modern context, you're tricking the algorithms.
You are absolutely tricking the algorithms. Trading algorithms love volume. They see a lot of activity. They see the price holding steady or rising when the rest of the market is weak, and they signal buy. Then retail investors see the chart going up, and they get FOMO, fear of missing out, and they jump in.
But if the only real buyer in the market is a related party, a company owned by the founder's brother, then it's a trap.
It's a complete trap. The price isn't real because there is no genuine organic demand at that level. It's a mirage. It's like putting your own money in the tip jar to make it look like everyone loves the band.
That's a great analogy. And the SEC is saying that Infra Holdings and MGS Construction were the ones putting money in the tip jar over and over again to keep the illusion of a popular stock alive.
That's the core of the price manipulation charge.
And then we have the insider trading allegation. This one feels more personal because it targets a specific individual, Senator Camille Villar.
Yes. Insider trading is a very specific and very serious crime. It means trading on material, non-public information. You know something the public doesn't, and you use it to make money.
And the SEC points to an incident from way back in December 2017. Why are they bringing up something from so long ago now?
These investigations are often like pulling on a thread. You find one problem and you just keep pulling and you see what unravels. They look for patterns of behavior. So the allegation is that back in 2017, she purchased 73,600 shares of the company worth about 1.43 million pesos at the time.
Okay, 1.43 million pesos. Compared to the trillion we were just talking about, that almost sounds like pocket change. It seems small.
It does, but the law doesn't care about the amount. It cares about the unfair advantage. The amount just determines the penalty. The core of the allegation is the timing. The SEC claims she bought these shares just hours before a major positive corporate disclosure was made public.
Hours before. So the timeline is she buys in, the good news drops, and then what happened to the stock?
The disclosure, as expected, led to a rise in the stock's price. So the clear implication from the SEC is that she knew the good news was coming because, well, she's a family member and a board member. So she bought the stock while it was still cheap, waited for the public announcement to pop the price, and instantly sat on a tidy, unearned gain.
It's cheating. It's like knowing the winning lottery numbers before they're drawn.
In the eyes of the law, yes.
Yeah.
And it's so corrosive because it fundamentally undermines the fairness of the market. If the game is rigged for the insiders, why would any outsider, any foreign pension fund, any local retail investor want to play? It turns the stock market into a private casino where the house not only always wins, but the house is also playing with marked cards.
And we should probably mention the context of all this. This investigation didn't just pop up out of nowhere. Villar Land has been in trouble for a little while now, right?
That's correct. This has been brewing. Villar Land's shares have actually been under a trading suspension since May of 2025.
And why was that?
Because they failed to submit that very same 2024 annual report on time. The delay itself was a huge red flag for the regulators. Usually when a public company delays filing a major report, it means one thing. They are fighting with their auditors.
The auditors are looking at the numbers and saying, we can't sign off on this, and the company is saying, you have to.
Exactly. And that fight likely dragged on for months, which led to the missed deadline, which triggered the trading suspension, and which almost certainly prompted the SEC to launch this full-blown investigation.
So we have the misleading numbers, the market manipulation, and the insider trading. But you can't pull off a trillion peso valuation on your own. You need help. You need someone to sign off on it. You need an appraiser. Let's talk about Section 4, the enablers.
Right. This is so important. You can't just stand up in a shareholder meeting and say, by the way, I've decided my land is now worth 1 trillion pesos. The market won't believe you. You need a third-party expert, an accredited professional, to produce a thick report with lots of charts that says, yes, we checked, we did the math, and it is indeed worth 1 trillion.
And in this case, that appraiser was a company called eValue Phils, Inc.
That's them.
What happened to eValue Phils?
They got hammered. Back in November 2025, so a couple of months before this criminal complaint, the SEC came down hard on them. They revoked their accreditation completely and fined them 1 million pesos.
Revoked their accreditation, so they can't do this kind of work anymore.
Not for publicly listed companies, no. The SEC essentially gave them the corporate death penalty. They determined that their methodologies for the Villar Land valuation were, and this is a direct quote, unreliable, and failed to comply with established valuation standards.
Unreliable methodologies. That's a very polite, bureaucratic way of saying they just made it up, isn't it?
Or, to be slightly more generous, that they used assumptions that were so aggressive, so detached from market reality, that the final number was essentially useless. This is a critical point about the whole ecosystem of financial fraud. It's rarely just one person. You need the gatekeepers to fail.
It's gatekeepers.
The appraiser is a gatekeeper. The external auditor is a gatekeeper. The independent director is supposed to be a gatekeeper.
And in this case, it seems like all the gates were just left wide open.
Precisely. And that brings us to the SEC itself, the ultimate gatekeeper of the market. And it really seems like the SEC is taking a very, very different stance these days. We're seeing a much more aggressive, much more assertive regulator.
The SEC chairman, Francisco Ed Lim, he's making a name for himself with this case.
He certainly is. He's quoted in the reports as saying, restoring investor trust was central to the agency's mandate. Now, that might sound like a generic line from a press release, but in the context of filing criminal charges against a former Senate president and his entire family, it's a battle cry.
It definitely sounds like they're tired of being seen as a toothless tiger.
I think that's exactly right. For a long time, there was this perception, you could call it the Philippines discount, if you will, that you could get away with certain things in the Philippine market if you were powerful and connected enough.
Right.
That the rules were more like suggestions for the elite.
Right.
Chairman Lim is signaling a major shift. The SEC is now looking into what they call integrity issues. They are sending a very loud warning shot across the bow of every major corporation in the country. Regulators are no longer willing to tolerate financial disclosures based on ambition rather than verifiable economics.
Ambition rather than verifiable economics. I love that phrase. It's such a polite but devastating burn. It basically says, your dreams are not assets on a balance sheet.
It cuts right to the core of the issue, doesn't it? You can be ambitious, you can have big plans for a Villar city, you can dream of a shining metropolis, but you cannot book those dreams as current year profit to lure in investors. There is a very clear line between vision and delusion, and legally, you cannot cross that line in a financial statement.
So we have the crime, we have the method, we have the enablers, and now the regulator is stepping up. Which brings us to the big question. So what? Section 5. Why does this matter to the guy driving a jeepney in Manila or the woman working in a BPO in Cebu, or for that matter, the foreign investor sitting in an office in New York looking at emerging markets?
Let's start with this concept of reputation as a balance sheet item. This is something the source material highlighted beautifully. In emerging markets like the Philippines, a company's reputation isn't just fluffy PR. It has a real, tangible monetary value.
How so? If people trust you, they lend you money at a cheaper interest rate, they're more willing to buy your stock.
Exactly. Trust literally lowers your cost of capital. If I'm a bank and I trust you, I'll lend to you at 5%. If I think you might be cooking the books, I'm going to demand 15% to compensate for that risk. When accounting assumptions, like a trillion peso land value, clash so violently with reality that reputation gets repriced almost overnight.
Repriced down.
Way down. Suddenly, nobody believes any of your numbers. And the Villar Empire has had this incredible narrative arc for decades. It went from being a humble home builder to this untouchable empire spanning water utilities, retail, energy. They were everywhere. They were seen as a symbol of success. Now, they are a governance test case. They have gone from being the example of success to being the example of what happens when governance fails spectacularly. And that kind of reputational damage is incredibly hard to undo. And it doesn't just hurt them, it spills over and taints the whole country.
And that's the market credibility issue.
That's it right there. The Philippines is constantly competing for foreign investment. We're up against Vietnam, Thailand, Indonesia, Malaysia. We want global funds to put their money into our factories, our infrastructure, our stock market.
But those big investors need to trust the system.
The big investors, the BlackRocks and Vanguards and sovereign wealth funds of the world, they need to know that the rules are real and that they apply to everyone. They need to know that a trillion peso claim on a balance sheet is based on concrete and steel, not a mirage on a spreadsheet.
Because if they see a company run by a former Senate president allegedly faking a trillion pesos and maybe getting away with it, they might think, well, is any company in the Philippines telling the truth?
Exactly. It creates that Philippines discount I mentioned. Investors might just stay away entirely, or they'll demand much higher returns to cover what they perceive as a high risk of fraud. And that hurts everyone. It means less capital available for legitimate businesses, which means fewer jobs created, which means slower economic growth for the entire country. It reminds me a little bit of the 1MDB scandal in Malaysia.
Oh, that was huge. Billions of dollars siphoned out of a state fund.
And it took Malaysia years to recover its international reputation. The Philippines cannot afford a scandal of that magnitude. For the economy to thrive, we need our markets to be boringly reliable, not excitingly fraudulent.
And finally, this is a massive test of political will, isn't it? The governance test.
This is the ultimate test. We often talk in abstract terms about the collision of political power and corporate enforcement. This is it. This is the head-on crash. We have a regulator appointed by the government going after a family that has been a pillar of that same government for decades. This is a test of whether the institutions are stronger than the personalities.
I mean, can the SEC really prosecute a sitting senator and a former Senate president? That just seems incredibly difficult in the Philippine context.
It is incredibly difficult. The political pressure on the SEC, on the Department of Justice, and eventually on the courts will be immense. You can be sure that phone calls will be made, favors will be called in. That is, realistically, how the world works, especially here.
But if they back down now,
If they back down, it proves the cynics right. It proves the system is rigged. It proves that there is one set of rules for the rich and powerful and another set for everyone else. It would be devastating for investor confidence.
but if they follow through, if they actually secure a conviction,
If they follow through, regardless of the ultimate verdict, it sends a powerful message that no one is above the law. It could actually be a turning point for the Philippines, signaling to the world that the country is serious about playing in the big leagues of global finance with real rules and real consequences.
it's a high-stakes drama that is going to play out in courtrooms and boardrooms for a very long time.
Absolutely. This filing is just the beginning of the legal battle. We can expect motions to dismiss, endless delays, appeals all the way to the Supreme Court. This will be a marathon, not a sprint.
Okay, let's try to recap what we've covered today, because there has been a lot, and I want to make sure we nail down the absolute key points for everyone listening.
It's a big, complicated story. So we started with the core of it, the numbers. The audacious claim of $1.33 trillion in assets versus the audited sober reality of just $35.7 billion. A discrepancy so large, it almost defies belief and it defines the entire scandal.
Then we looked at the mechanics of the alleged fraud, the use of family-owned firms like Infra Holdings and MGS Construction to artificially support the stock price, what you call painting the tape to fake market demand.
Right, and we touched on the very specific, very personal insider trading charge leveled against Senator Camille Villar, the allegation of buying shares just hours before good news dropped, allegedly capitalizing on her privileged position.
And we discussed the fallout, the collateral damage, the appraiser, E-value fills, losing its license, and the SEC's newfound assertiveness under Chairman Lim, signaling a desire to act as a real, powerful watchdog, not a lapdog.
And finally, we talked about the broader implication, that a company's reputation is fragile, and that the credibility of the entire Philippine capital market is now hanging in the balance, being tested by this single case.
It really makes you think. The source material we read mentions that what began as just a very aggressive land valuation has now evolved into one of the most consequential corporate enforcement actions in modern Philippine history.
It absolutely has, and I think I want to leave the listener with this one thought. We live in a financial world that is increasingly abstract. We trade bits and bytes on a screen. We value companies based on future potential and synergies. We talk about fair value and mark-to-model accounting. It's very easy to get lost in all that abstraction.
Forgetting that it's supposed to connect to something real.
Exactly. This story is a brutal, shocking reminder that at some point, the math has to work. The numbers have to connect to reality. You can't eat fair value.
That's a great way to put it.
So here is the provocative thought for you to chew on. In a world where financial reports can be revalued by trillions on a whim, how much of the market, the stocks in your pension fund, the giant companies you admire, how much of it is built on concrete and steel, and how much is built on these fair value dreams?
That is a genuinely scary thought.
And if 1 trillion pesos can vanish from a balance sheet overnight, simply because one auditor finally stood up and said no, what does that tell us about the solidity of the empires we think are too big to fail? Are they really castles made of stone, or are some of them just castles made of sand waiting for the tide to come in?
Something to think about next time you look at a stock ticker. That's it for this deep dive. Stay curious, everyone.
And keep asking questions.